along those lines. We talk about the emerging axis capitalizing on the South-South trade surge.
And this is going to happen on the very issue when we speak of the global economic center of gravity that now seems to be shifting towards global south. Corridors across Asia, Africa, and Latin America that are now deepening, with investment partnerships are now expanding with new industrial hubs that are also emerging. And this shift is structural, not temporary. Emerging economies are now driving demand, supply chain diversification, and capital allocation priorities. Yet, growth without any institutional strength risks volatility.
Absolutely, and emerging markets hence must balance rapid expansion with financial discipline, environmental responsibility, and social inclusion. Coordination amongst economies hence becomes essential to prevent fragmentation. So as India strengthens its engagement across the global south, the big question is, how does it position itself as both a participant and an anchor? Ladies and gentlemen, please welcome on stage Mr. Ranil Manohara Salgado of the International Monetary Fund, IMF, and Sebastian Eckhard of the World Bank. This session is going to be moderated by Mr. Nitin Desai. In fact, we'll just wait for the gentlemen to walk up on stage. But ladies and gentlemen, this discussion is essentially about how the global south is going to be the center of all the developments and the disruptions that we're seeing. In fact, due to disruptions that we're seeing on account of geo-economic and geopolitical factors, there is a lot of shift that's happening even politically, and which is why this conversation about the South-South trade surge is important. Remember, India is, of course, looking at diversification when it comes to trade, and something that we've also seen come in from other countries as well of the global south, in fact, even in Europe as well.
So the guests are on stage. Please welcome once again Ranil Manohara Salgado of the International Monetary Fund, Sebastian Eckhard of the World Bank, and this session is going to be moderated by Nitin Desai. Over to you.
Welcome. I'm glad to be here. And we are basically what we've been talking about is the growth in South-South trade and what's likely to happen. And if you see what's happened over the past 25 years, the amount of trading, the share of the South into global trade has shot up from around 15-20% to around 40%. And trade amongst them has also increased about eightfold, from around 1.7 trillion to over 14 trillion over this period. And it's also become, the proportion of their trade, which is with other southerns, has gone up from 45 to 60 odd, from 45 to around 60 odd percent. So what we have as the pleasure is that we have two people who are going to talk to us about this. Ranil Manohara Salgado, who's a senior resident representative of the IMF, and Sebastian Eckhard was recently joined as a regional director of the World Bank. We'll begin with Ranil Manohara Salgado, and essentially his assessment of how durable is this enormous rise in the trade between South and South, which has taken up. Does it involve capital flows, or is it just trade? And what should the policymakers be worrying about this? And how are institutions like IMF involved in this? So may I now first turn to Ranil Manohara Salgado.
Thank you, Mr. Desai. It's my pleasure to be here today, and I thank the Times Group for inviting me to this important summit. So from the IMF context, maybe I'll reverse it a little bit. Some of the questions Mr. Desai asked is thinking about the global context recently before focusing on the South-South trade and South-South financial flows. So the global context that we've seen essentially from the global financial crisis, so starting around 2010, is something the IMF has started to call, we had a period of what was called globalization, hyperglobalization you might call it, leading up to the global financial crisis. And subsequently, things have kind of flattened out. If you look at trade, especially as a share of global GDP, trade, which had increased dramatically until about 2010, has now kind of plateaued. So we're not getting the opportunities for southern countries to gain from a rapidly expanding trade environment. So that's point one. Point two, so things move up and down, but roughly flat in terms of trade as a share of GDP. Point two is what we've also noticed, unfortunately, is direct investment. Foreign direct investment as a share of GDP actually has fallen. That is what is remarkable and tends to be more linked to geopolitical friends, right? So this is what's going on in the world for the last 15 years, especially pressures in the advanced economies, where there was a feeling that many in those rich countries, there were people being left out, is putting political pressure on those advanced countries, which is leading to more geopolitical issues and realignment. And that's kind of the concern I think we would have for South-South countries. So in that context, what the South countries have done is important. Mr. Desai already mentioned that the expansion of trade between them has been substantial. We think it's structurally sound. It is driven partly by improving domestic demand, both investment and consumption in these southern countries as they develop and grow richer. It's also because they've made efforts to link to each other, whether through regional trade agreements or other ways. And finally, they've also pursued, many of them, very sound macroeconomic policies, which are, we think, important to provide stability. And this is particularly true linked to monetary policy issues, where inflation in the emerging market economies has come down fairly dramatically. Fiscal frameworks have improved, but there's a caveat to that. And this has helped support the potential flows between South-South countries, although that still remains weaker than, say, the trade flows between South-South countries. And then I just want to add one thing on fiscal. I think the COVID epidemic crisis did create some fiscal stresses globally for all countries. So in that context, we've seen public debt levels rise dramatically. This is not just true of emerging markets, it is even more true of the advanced countries, which is putting additional stress and drawing resources from the private sector, and this remains a concern. So our broader message on fiscal is the need for consolidation over the medium term. That's a message we especially emphasize for advanced countries, but we think is also important for emerging markets. So I'll stop there and hand over to Sebastian.
Let me now ask also, these are the World Bank, and they are, of course, much more directly involved. And there's a whole set of issues which arise about why is it something related here to what is happening in the southern states on infrastructure, on energy, etc. Is it something which is because of certain changes in the government programs vis-a-vis the private sector? Are there some pattern of corridor contacts in the South-South trade? And can it be made to be something which will communicate to the development of green technology, green economy? So let me now turn to you, please.
Thank you very much, Mr. Desai, and a pleasure to be here. I think I'm probably the last speaker before lunch, so let me try to be brief. Just, Mr. Desai, picking up the point you made in your introduction, that there's been a very rapid, despite the sort of more gloomy picture on global trade, there has been this rapid expansion of South-South trade already. I think one number that struck me as I looked up before coming here is if you look at the share of global consumption of developing economies, it's now close to half. So that's a market opportunity there that is close to $35 trillion potentially. That's bigger than the EU market. That's bigger than the US market. But of course, it's the developing countries as a group. Now, in terms of tapping that potential and seizing that opportunity, I think it's important to recognize that there are infrastructure and policy priorities that would need to be addressed. And essentially, I would pack it in two elements. So one is to increase physical connectivity, building more physical infrastructure. And the second element is to decrease non-physical barriers to trade. Now, on the physical infrastructure side, about 80% of global trade is maritime trade, and the vast majority, more than half of that, is containerized merchandise trade. Some commodity trade, oil tankers, is about the rest. So clearly, what a critical piece of infrastructure is efficient deep-sea port capacity. And if we look across the developing world, that capacity exists, but it's very uneven. So I was, before coming, working on South Asia and moving here to India, I was based in China and in Singapore. And in East Asia, if we look at East Asia, container throughput across East Asian ports is around estimates between 400 to 450 million containers per year. The largest port in the world, which is the port of Shanghai alone, handles about 50 million containers a year. Now, if we look at South Asia, for example, South Asia as a whole has only about 40 to 50 million container throughput in the existing port infrastructure. The largest port, I believe, here in India, PNTP near Mumbai, has about 7 million. If you go to Africa, the whole continent has around between 35 and 40 million container throughput. So there's huge imbalances in terms of port infrastructure across the developing world. And of course, in a sense, maritime trade, since it's the lifeblood of global trade, having access, gateways into that trading system is critical. In addition, I think, of course, then building hinterland connectivity and good, strong logistics systems is important. So that's on the physical connectivity. On lowering non-physical barriers to trade, I think it's also noteworthy that despite what happened in the last 2 years in terms of increased trade barriers in some of the developed economies, notably the US, we do see that if we look at trade barriers between the developing countries, they are still, on average, 2 to 3 times higher than barriers between the developed world and the developing world. And that, of course, increases trade costs and is an impediment to stronger trade integration. And it's not just tariffs, it's also non-tariff barriers. So everything from product standards, trade licensing regimes, and so on, that again put barriers for cross-border trade. Now, the WTO has estimated that addressing both tariff and non-tariff trade barriers could reduce trade costs by an average of 30%. So this might be as important, if not more important, than perhaps building physical infrastructure. And of course, these things are, in general, often policy decisions. So I think addressing those policy priorities is something that can be done and that is quite cost-effective in a sense. Of course, one has to handle the political feasibility around addressing especially tariffs and protection and so on, but I think it's a huge opportunity lowering those barriers to really further boost trade flows between developing economies.
Can I just quickly pose a couple of questions to both of you? One is looking ahead at the future. In many ways, what is happening in two key countries, China and USA, is very different from what it has been in the past. China is becoming a much more high technology company than it was before. USA, I better not say what it wants to become because nobody knows, but they are certainly not as easy. In any case, for South-South trade, it's not crucially relevant. The question I would pose is this, that since the South will have much faster GDP growth than the developed world has, certainly its share of 40% in trade is bound to go up. Is it something where you can expect that some parts of the South will become starters of global value chains connecting Southern income? Is there some possibility of some of this leading ultimately to investment exchange? Or are there issues where the competition between the Southern countries will leave this out? And a quick reaction that you can have.
So, yes, and I think we're hopeful that it will begin now and continue. Part of the issue today, you would think China could already be playing that role, right? But right now, China still remains more focused because there are backward regions of China still. And I think the focus has been more on those backward regions and ensuring that Chinese growth remains strong. And unfortunately also, in some sense, focusing, although they're changing now towards focusing more on driving consumption in China, that for a long time it has really been driving investment in China and leading to more. I shouldn't speak so much. Sebastian's more probably an expert on this than I am. So we would expect over time that especially some of the larger countries could be the driver of these supply chains. And that's where I lead to India, right? India already has the world's largest population, is the world's fastest growing large economy. For the last 35 years, it's grown 67% if you look at any 5-10-year periods on average. It is now getting to the point where it has a substantial middle class. And if reforms continue in India, if macroeconomic stability continues in India as it has for the past few decades, we think India could be that source of growth and that source of creating new value chains.
I fully agree with what Anil said. I think if we look at the sort of the global trade landscape and the shifts, right? So on the demand side, we already spoke. There is this shift of gravity towards developing economies, and I think that's going to continue, and that's going to be a big boost to trade. On the supply side, of course, we do see that with policy shifts in all major economies towards more supply chain resilience and also to some extent fragmentation of the global trading system, there's a reconfiguration of global supply chains. And again, having worked on East Asia, of course, you do see this, for example, in the China Plus One strategy, where part of the supply chains from China are moving to other parts of the developing world, East Asia, Vietnam, Thailand, Malaysia, or Mexico. And I think that reconfiguration on the supply chain and diversification of supply chains, I think, again, offers an opportunity. So if you take these two together, I think looking ahead, both of these bode very well for increased trade integration between developing countries. And if they are further catalyzed by infrastructure investment and policy reform to boost integration, I think this could really be a big driver for the next generation of basically trade, growth, and job creation in the developing economies.
Thank you very much. Well, basically the conclusion that I would draw from what they've said is that when you look at the future, you're going to see much more than a rise in trade between the southern countries. You're going to see a transformation of this trade in some form. So perhaps next time, 5 years from now, when you have this meeting, we'll be discussing something a little bit more complicated than the rise in South-South trade. Anyhow, we have run out of time, and we are also very close to our lunch. So many thanks to both of you for your contribution, and many thanks to all of you for listening. Thank you.
All right, thank you very much, gentlemen, for that